Mr. Ross Gerber's, of course, joining us from Gerber Kawasaki. George, Ross, great to have you back here. So look, let's get this stuff out of the way from the last hour and a half. Elon's been tweeting like wild on Twitter. I know you commented on a few things. I don't want to even address the acronym thing because it's so absurd. But what do you think? I mean, what's the message here? Don't you want him to calm down a little bit?
I mean, if you made $3 billion today, would you be mellow? I mean,
I don't know.
Look, the guy, and me too, have been under so much criticism and pressure. A year ago, really to the day, was one of the hardest times for me as an investor, to be honest. And I went through all kinds of steps to make sure I was making the right move with this investment. And a lot of people doubted Elon, a lot of people. So this is a great day for Elon and Tesla investors. And I say, tweet away. Just don't tweet anything material, please, Elon.
All right. So as we see, he's taunting with the shorts again. Hey, that one's funny. Even I got in on that one because I'm wearing shorts today. But Ross,
I mean, I'm a stock trader, so I don't like that stuff. I think I'm superstitious, so that means I might sell some stocks on Monday. But
where are you right now with Tesla, Ross? Because I know along the way when this thing was ramping up, a few times you were either on my show or Nicole's, and you said that it looked like it was getting a little bit rich for your blood.
Oh, I mean, it's so rich for my blood, but it's my top holding as a stock here at my firm, and we had already taken profits before when we felt that we had gotten overweight the stock. So we're in the position we want to be with Tesla, and we're letting it ride. And it's been incredibly profitable for my clients and myself. So it's, look, I'm not going to complain about one of my positions going up 20% a week or whatever. But, look, the market's really overvalued right now. I've gone on record for saying I'm a bear right now. I think what's going on in the economy is really disastrous, and people are cheering 4 million jobs like those were new jobs. Those are people just getting back jobs. They were fired 3 months ago. This is like you're celebrating. I walk down the street and there's boarded up things and people rioting in the streets and social unrest. So this is not an environment where the market makes any sense here, and we've been taking profits. But stocks like Tesla are just our core holdings. That's the way my company works, and I do as an investor, and I just don't change those positions.
Okay, so for Tesla, walk me through how, Ross, you can wax so bearish on the overall world, it sounds, and economy, but yet still be very excited about a company that depends on people outlaying 30 to 70 grand for a car. I mean, that seems like if you're bearish on the market or the economy, do you not want to be bearish Tesla then too?
Right, and that was, I think, why Tesla took such a big jump today, because, I said it too, like I had no idea what demand really was. I just got a Model Y, and two of my partners just got a Model Y too, and they're amazing cars, so I knew that the Model Y would do well, but what about the Model S and the expensive cars, And so that's why I think these numbers are so impressive, because the truth is Tesla doesn't even represent 1% of the auto market here in the United States or whatever. People want EV cars, and they're tired of these gas, guzzling, environmentally unfriendly vehicles. And so what's happening is there's just an unlimited demand for EVs, and all the other car makers are just going to lose. And you can see that in the numbers.
Well, it looks like there's more car makers, though, that think they have a chance of winning. NIO's still there, the Nikola stuff. You've got a bunch of other trucks coming from other makers, too. We did a hit on it earlier this week, and it's just hard to keep track of all the electric trucks that are going to be on the market in the next year. Okay,
I walk this factory. I get how batteries work. I'm not an expert at this, technical stuff, but, what scaling EV production is incredibly difficult, so difficult I can't explain. And so I wish all these companies luck. I really do. I want to see EVs all over the place in all different kinds of cars and trucks. But I think there's going to be many, many challenges to come for any of these companies to scale and really dent the market. So I think it helps Tesla over time. It doesn't hurt them.
Ross, do you think that Tesla has a specific secular market that they dominate, which is the growth of EVs? Then are those types of companies with those secular growth markets, whether it is cars, chips, AI, all the stuff that's been doing so well, are we going to get more and more separation between the NASDAQ and small caps and the cyclical, economically dependent stuff? Because it kind of sounds like that would be the natural conclusion of your views, which are positive Tesla, negative on everything else.
That's right, OJ. You just hit the exact thing that's working actually for me right now, because I only have half my money in the stock market right now, but everything I own is in the digital economy. I'm a tech investor. You guys know that. And so I've always believed the digital economy would eventually replace much of the physical economy. And what COVID is it really is like the meteor that hit, the earth and changed the dinosaurs. So all the dinosaurs, whether it be Macy's or AT&T or whatever, they're all going to die. And it sounds horrible and it's sad, and that's actually true. There's a huge human toll. So I don't want to appreciate that, but
sure,
that's economics. These people will get retrained into new jobs in the digital economy and have different jobs. And whether it's moving from working at a cable company to working at Netflix or switching to satellite and 5G versus the things of the past. But right now, what COVID has done is that if you're a digital business and you're able to function digitally, you're booming. You're booming.
Yeah.
If you're not, you're still trying to figure out what to do with your stores or your restaurants or your theaters or and most of these people, as much as they're humans and I feel for them, they're bad business people, a lot of them, and they had many opportunities to move on to Shopify, to use digital solutions, and they really just resisted them. Apple Pay, I don't want to change my business. Well, the meteor hit and the dinosaurs are dying. And so, unfortunately, this is going to be a very disruptive period where there'll be enormous winners like Tesla, and maybe like stocks like Zoom and DocuSign that you're seeing, Shopify, Spotify, you're seeing these digital stocks go crazy. But it's also like, why would I own the physical economy right now? You'd be nuts to buy like a commercial real estate building. I love these real estate people. They're out of their minds.
Well, Ross, this kind of makes me want to go a little bit back to the macro with you for a second. I know you're a stock guy. People know you as a tech stock guy. But since we were also discussing a view on the overall market, to me, there's almost this kind of strange, perverse harmony that seems to be existing right now that does make some sense if you are a believer that the U.S. will still have its dominance on the global stage economically. Then if we're moving towards a future economy where automation is displacing people, all these future tech companies getting pushed forward now, what doesn't make sense about a central bank saying, hey, here's a basic income or an unemployment check and go invest it in an NVIDIA or a Tesla because people don't have to work as much anymore? I mean, is that a future that makes sense? What's wrong with that?
Honestly, OJ, that's what's happening right now. So we had $108 billion go out for unemployment this
right.
month.
You think we're going to get away with it? Are you concerned about deficit stuff?
And you're seeing barstool kids trading stocks, right? And they're trading it with these like stimulus checks. That's what they're doing. And so that's exactly what's happening. But what that isn't capitalism, OJ. It's not capitalism when the federal government gives people money and then prints money and gives it to businesses and gives it to everybody.
Sure.
Some fantastic.
Is it necessarily bad or problematic though, Ross?
It's okay. So here's how it works. If we accept this as in capitalism and it's just a somewhat government manipulated economy, that's okay for stocks, right? But like the problem is, let's say the government buys a bunch of bonds from a bunch of companies like they're doing right now through BlackRock, the same people we use. And so now they own the same bonds that I own. And so the government now holds these bonds to maturity. This is a great move for the government today if when it matures, the government pays back the loans. You see what I'm saying? So if the government pays back all these debts that they're buying right now from companies, and when they mature, it pays back all the debt, the Fed will have done a brilliant hedge fund trade. You see what I'm saying? And it would be very good for America. But if they don't pay off the debt, it will saddle the millennial generation with a huge albatross that will last till their kids grow up. So that's the risk reward. It's the moral hazard they warned about 10 years ago has happened.
Okay.
And I'm sure Bernanke pukes up every night.
All right, I know it's a longer conversation for another time. Hey, Ross, before we let you go, though, real quick, how do you know when to get out of Tesla? I mean, is there ever a price where you just get out?
I've owned Apple my whole life and Disney my whole life, and I hope I can say the same for Tesla.
Okay.
I think every investor has to just look at what their risk tolerance is and what percentage of their portfolio Tesla should be. And you should be able to sleep at night.
All right, Ross, good to have you here on a Thursday. Appreciate it.
Yeah, thank you.
All right, fun as always. Ross Gerber from Gerber Kawasaki.